Ladies and gentlemen, welcome to the midday market madness. This morning, we ended up seeing Walmart earnings, and Walmart is now officially not putting up the total revenue in the trailing 12 months that Amazon is putting up. Amazon is officially the largest revenue business in the world. Is what it is. Bet on growth, I guess. How's everybody doing today? Sorry, I was a little late. Yes, I admit I was trying to choke down a protein bar as fast as I could, and then Tevis called me, so blame it on him. Hopefully everyone is doing well. Michelle, Zach, Brad, how you guys doing? How are you guys doing? Tanner is late? I don't think that's true. All right. Let's jump into the markets. Oh, the light is off. Give me 1 second. The light is not supposed to be off. It's a red day. How's everybody doing? June. Jeremy. What's up, guys? Okay. First off, let's take a look at the markets. Let's take a little quick sneaky peeky. One Stop Systems at the top of my list here, up 19.3% to $9.96. John Deere up 13% on the day after earnings. Did One Stop Systems also have earnings, or is this just a small cap name that people are just betting big on? Let's have a look. No, they have earnings in 27 days. Geez, that's a late earnings. Venture Global also up 6.5%. The VIX is up, pushing a lot of these names, aside from Figma, that also had earnings last night that ended up looking really good, mind you. They look to be actually strengthened by artificial intelligence, and maybe people have, called the death on this business a little early. If we go back to where they went public at $50 billion of market cap, now today you can pick them up for $13.4 billion, even though net dollar retention was at 136%. Client retention was at 97%. They had a new pricing model that they're pushing out into 2026, where they're not just going to be pricing on a seat base, but also AI credits as well. They did a partnership with Anthropic to actually be able to sort of push designs from Claude into Figma, so then you can actually have those assets be immediately, malleable, and you can vectorize different things and help with design and make buttons actually clickable, and then put it back to Claude for more coding. It's a pretty interesting business. However, only up 6%, even though in the after hours, this stock was upwards of $29 a share, back down to 25 today. SMCI up 5.3. Coca-Cola and Roblox even is up 2%. Where did Roblox go after their earnings? I know we had a big spike, but did that? Yeah, that completely got erased. Wow. This company was up like 20+% on earnings day. That is just crazy. No company is safe in this market, not even Walmart. Putting up decent numbers, not good enough, Walmart. This was a double beat on Walmart. However, revenue was only up 0.8%. EPS was up 1.4%. Stock is flat on the day. All right. A better app to buy will come soon. Maybe. So I was actually vibe coding last night and this morning. I was on base 44 because I've been doing some research on Wix. I mean, boy, oh boy, these are like the coding agents. I can't even tell you how good they are now. It's mind-blowing to me. I'm talking about single prompt to fully working application. Incredible. So I don't want anything to build to sell or any of this AI slop, but I just wanted some internal tools to help with things like potentially website traffic or job postings or stuff like this. And for me, if I can build essentially an unlimited amount of these internal tools to help create a dashboard for me for information or sourcing charts, stuff like this. I mean, what's the cost that Base could accurately charge me on that? You're going to charge me $50 a month to solve all my back end problems? Okay, with no coding requirements, just ideas. Okay, so I'm going to continue to play around with that. And honestly, I didn't even want to go live. I was having so much fun, and I just wanted to keep looking into companies like Wix. This company, after I found this product, obviously the large majority of their revenue comes from their core Wix business model, which might be under some stress, even though people aren't actually looking at the numbers today. The numbers don't show stress. The backlog, like nothing about the current numbers looks stressed, but people are forward looking in markets. So they potentially see that a competitor like even Base.com will be cannibalistic to their own company, or another business like Lovable will be able to take over and build apps that are, potentially solving some core issues that Wix currently solves, but at much cheaper rates, and maybe doesn't, allow Wix to grow at the same level that they were growing before. I don't know. I do not know. Can you create a new Claude? Yeah. Yeah, Gemini actually just had a big upgrade. I think that there will be more players than there are today. There always will be, right? There's been times before where Motorola was insanely big, or Nokia or something like this, and they're like, these are the phones. Like no one's going to be able to step into the mobile phone game because we have Motorola. There's always a opportunity for new companies to enter the space and just think of the problems in a different way. So, yes, there could be a new Claude for sure. Tanner, do you have a position in Wix? I don't. However, I'm looking at it and I'm having a lot of fun. Like, I just like exploring new names. That's the fun of investing. Figma being another one. I'm having a blast learning about these different companies. But these are two completely separate names, yet they're both drawn down on their stock prices by like 80 plus percentages. Like this company, to put this into perspective, okay, I know it gets looked at a lot like PayPal or something like this. And even I made that, sort of connection. A company that is buying back so much stock and, they might be doing okay today, but the future could say, hey, you know what? They're actually not growing anymore. And we're actually expecting declines in growth. Yikes. Okay, that's what we don't want to see. Wix put up a 2-year share buyback program of $2 billion. The stock today is at $3.6 billion, meaning that their buyback program represents 55% of their outstanding shares at today's prices. Or on an annualized basis, let's say if they just DCA'd this in, assuming the price stays flat, even though it's not, it's continuing to fall, another down 3.8% here, is a buyback rate of 27.5% per year. That's like twice as high as, PayPal's highest buyback rate, while growing much faster. And they have a piece of their business, which is Base 44, which is absolutely in the realm of the types of companies that I love to invest in. Innovative, growing at gangbusters rates. We're talking, them 7xing their business in the last 9 months. They want to shoot for essentially 400 to 500% for next year. It represents a small percentage of their overall revenue today, but who knows? Who does know? Game, you just asked that question. I don't know, brother. You just asked that question. I don't know. I don't know everything about Figma, so I couldn't tell you. I think it looks extremely interesting. I think one of one companies. I think it's a one of one company. I think that deserves a premium. It's not getting a premium right now. They have an extremely bright team. They're used by a ton of the Fortune 500. They're used by a ton of the Fortune 100 companies. They're an interesting space. Companies are deepening their relationship with Figma. Yeah. But there's a lot in investing. I can't say whether it's a buy. I don't know much about them. What's up with SoFi keeps dropping? I know it's a painful name to hold. Dude, did we almost hit freaking $18 here? Okay. I guess the 10K scared people. I don't know if you guys saw my video, but I saw a lot of very bright signs. There was like one red flag that I saw that was like it was only partly red flag because they actually saw defaults dropping and dropping and dropping on their credit cards. But a lot of the loans were coming from really low FICO individuals. I mean, really low. But if their defaults are dropping, well, then what's the red flag? The worry of low FICO score individuals growing their loans with you is that they're going to default more. That's the opposite of what we're seeing. So it was like a semi-red flag. It was a yellow flag. Tanner, man, let's talk some Nebius. Yeah, I mean, dude, I love Nebius. I'm not changing my mind on Nebius. I'm going to continue to buy more Nebius. I want to have about a 5% stake in Nebius in my whole portfolio. I'm a big believer. Now, to be fair, that doesn't sound like a big percentage, but I'm just not a good seller of stocks. And, between SoFi, Shopify, and Nvidia, that makes up for friggin' like 80% of my portfolio, 70 something percent of my portfolio. So out of the other names, that's a pretty decent name. But I have a hard time selling companies. I was talking in the, the growth investing membership only live stream. I got to figure out a better name, but the Future Investing Pro membership, that we were talking in that live stream earlier, that I might end up potentially trimming Shopify to enter into Wix if I want a 1 or 2% allocation in that name, just as being like a, potentially high flying name, but very, very risky. And I just want to take like a bet on that company. That, my allocation to Shopify is very, very high. And I don't want to build out I'm a big sector investor, right? I don't want e-commerce and online stuff to get too big. I already have Amazon. I have Shopify. I have a lot of these names. So yeah. What percentage cash do you have allocated usually? Usually 0. And today it's 0. I've got no cash. I'm waiting for money here, or covered calls and this sort of stuff where you can generate a little bit of money. And in fact, Nick was actually in chat talking about how you could possibly enter into a name like Wix. And I might do that through something like in the money cash secured puts, maybe like $70 or something like this. He was showing me, in the actual options chain that you can get $70 Wix shares or contracts for roughly $8.30. So your break even's like $61.50 for March 20th. If somehow it skyrockets up, am I going to get mad that I got $8.30 a share? Probably not. If I do end up getting the shares at an average or at a break even of $61.50, I'm not mad. So, yeah. Waiting for my tax return to spend. Yeah, I'm not going to have any form of a tax return. At least half my portfolio is cash and waiting for instructions. No instructions here. I'm not doing that. Okay. You ever look at Sezzle? I've taken small looks at Sezzle, but it scares the crap out of me. Yeah. When are you going to buy Michael Burry's Substack? I'm actually base 44ing my own version of I'm studying all of Michael Burry's thoughts, and it's going to be able to output what it thinks it was going to say on any particular company. So when AI gets good enough, it'll just be able to copy one for one exactly what he wrote down. I'm kidding. I just don't care about what Michael Burry has to say. You know what? I was listening to the SoFi Michael Lewis, AI, is it a boomer bubble podcast? And what he ended up saying after covering The Big Short, which was Michael Burry's big claim to fame, is that he said that there's a lot of people who have been able to, predict what was going to happen. There's not many people who have been able to predict it twice. And so he said, even though, Michael Burry was brilliant, he tells me all sorts of stuff and they've never come true. And he doesn't trust what he has to say at all. And it's like, yeah, it's hard to predict two disasters. If you had to short a stock, what would you short? I don't know. No idea. Let's see. Be up. That's the exact video that I'm talking about, but it wasn't with a guy named Michael Miller. It was Michael Lewis. It's the exact video I'm talking about. Tanner makes SoFi go up. No, actually, I prefer to watch it drop into the $18 ranges. I'm kidding, but we're about to. This is a mess, said Dookie Pie. Dookie, this is what you wanted. You had cash. What are you buying right now? Are you buying AMD and like a lot of those similar names, or are you putting your money into something else these days? You haven't told me what you're buying in a bit. You and Steve are so funny. Thank you. I should say there was some comments regarding. So that was all completely my fault. His initial question, which I missed, or I just didn't hear it the way that he said it, was, do you think that Nvidia CPUs can disrupt AMD? And the answer should have been no. Okay, because they're going after, for the most part, different markets. What I interpreted that as is, which one is going to be bigger? Like, do you think that Nvidia can be bigger at selling CPUs? And then that's where I came in and I said, absolutely. And then that's where it sort of started that fuss. But disrupt? Yeah, probably not. AMD is going to live a very, very, very long and prosperous life. Okay. Doogie Pie is shorting. Gosh. You got bigger balls than me, Dookie. Klarna is down 27%. I thought you guys were getting rid of like half your staff. I thought AI was replacing all of your staff. Somehow EPS revenue came in up 1% and EPS missed by 500%. They were expecting negative 2 cents. They did negative 12. Stocks down. Carvana. I didn't listen to this call. I don't even know why it's down, but the actual numbers look like a huge beat versus, like, this actually can't be true, right? That EPS, they were expecting $1.13. What they actually saw was $4.22, beat by 273%. Stock down 12.6%. Something wrong has to be going on there. Was it a bad guide or something? Oh, the only one yesterday that I actually paid attention to and listened to the call was Figma. And it sounded great. It sounded amazing. Like Figma up 7 now. It's great. Dude, this market in the morning is crazy. If I was a short seller, I would be buying at 9:30 and then closing those shorts in freaking 20 minutes. Every day it's like this for these companies. They get destroyed and then they come back 20 minutes later. Okay. Tanner, I heard from a YouTuber yesterday that shorting on Robinhood is fun and easy. I heard a similar thing. I heard YouTubers were making, singles of dollars yesterday, gambling thousands of dollars. I'm telling you, Amit's becoming a real degen these days. Also, why is Dougie not a mod? Let's make this guy a mod. It was great to meet Dougie in New York. It was a ton of fun. Also, the fashion sense. You cannot keep up with Dougie in a white suit. I wouldn't even try. Yeah, I think he made like $2.70 shorting like $9,000 of Nvidia. Like, just taking risks. But hey, I'm a shareholder of Robinhood. Go ahead, play around with the tools. Okay. New Gemini model is already in base 44. What? Like the 3.1 Pro? I don't even know how to check, but I'll believe you. So going through a little bit of the news, which lately I've been writing down so many pieces of news every day, and then we don't even get around to it because I'm just shooting the crap with you guys. Most of you guys already hear it from the morning streams and everything, but regardless, Google ended up upgrading their latest model on Google Cloud. So for their enterprise clients and everything like this, they are now back as being a frontier model, specifically in coding and agentic AI. Okay. Doing much better than the actual Gemini 3 Pro model as well. And this is where we're going. The models fight for dominance. The winner is the consumer. Or in this case, the winner is, the many, many cloud providers that are going to be growing at high rates. Tanner's never heard of a stop loss? No, it's just I'm not a pussy. Okay? I take my lumps and then I get my victories. I'm not here to write stop losses so then whenever the market tells me I'm wrong in my timeline, that I end up selling stocks that I like just because they ended up having a flash crash. I've heard of a stop loss. I deny the fact that I have to use them. Okay. Stop losses are soft. Yeah, exactly. I take my lumps. When I'm wrong, I need to feel it. Sorry, I didn't have the chat on screen. Okay. Morgan Stanley ended up putting out a report that said Nvidia is the most under-owned mega cap stock. And they said that there was a negative 2.57% gap between its S&P 500 weighting and active institutional ownership. That's what Nvidia is at right now. You must not day trade then. You and me both, brother. I will not. But Nvidia 186 My goal is that this company surpasses $250 by end of year, which is extremely, even that is disrespectful. But we're going to have essentially 3 more quarters in this calendar year that will end up increasing their earnings, lowering the multiple that you pay for this company, and then hopefully the guidance and CapEx and everything like this that recycles for 2027 also shows off high growth. Do I think it's going to be, 70+% growth? Excuse me. No, but and by the way, that's how much growth we just saw on CapEx this year. 70% year over year. Nvidia is guiding for 60+% growths, growing, mind you. Like that got down to like 58%. Then, everyone modeled out Nvidia's growth going down into the teens, and then now it's starting to reaccelerate 2 quarters in a row. We'll see how it holds out. All right. Monday.com just got confirmed as another enterprise customer of Nebius. Nebius, I think, is actually up on the day, unlike some of these, growth off stocks that we end up seeing. I pulled up your channel, didn't show that you were live, then went back to a regular YouTube, and there you were. Some sort of glitch. They got to get their act in order. I've been seeing a lot of glitches on YouTube. The market will shift after Nvidia earnings up, Dookie. You were directionally correct 1,000% the last time that you said that Nvidia was going to go down. And I didn't believe you, and it did. Now, to be fair, it didn't hit the price that you wanted it to, but it did directionally go in where you said it was going to go. Are you saying that the market will shift upwards or downwards after Nvidia earnings? Iran geopolitics might stall Nvidia. Yeah, you might be right. I think 2 weeks after it'll go up. I can wait 2 weeks. I can wait 2 weeks. Why are people bored of Nvidia? Well, I think that it is like you go out. I understand, it being flat. I'm not even on Nvidia. What am I looking at? I think people are just getting annoyed at this sort of price action for a while now. Now, we've been sort of flat since July of 2025, going all the way to February. But I've been doing this for a while. There's been a lot of stagnant periods in Nvidia. My personal portfolio strategy, which doesn't mean that it's right for you, is that in order for me to find, these 10Xs or 20Xs or something like this, that doesn't mean that they're, straight shots. If any single time that they started to slow down, you're rotating it into other names, guess what? You're not going to find a 10 bagger or something like this. You got to have conviction through that. And that's just involving me double checking, my notes, making sure that my thesis is staying intact. And what has changed on the Nvidia thesis? I'd like to know. Nvidia got to 171. I said 167. That's close enough. It is close enough. I didn't say it wasn't close enough. I just said it didn't hit your target. Okay. So if you had like a buy order in at 167, it wouldn't have entered. Hey, we all love you, Dookie. I'm taking any small victory that I can get these days. Tanner, what's your top 3 Mag 7 names if you didn't own them already? If I didn't own them already, Nvidia. I'm really, really, really liking Meta right here. And I mean, at these prices, I might have to say Amazon. But boy, oh boy, is Google really close on that list for sure. Google is going to get like, for real, cloud growth above 50% for all of 2026. How is that possible? Like that's too high. In my opinion, Meta is dead for 2 years. Dead money for 2 years. Why? Well, it's the cheapest company in the valuations for the Mag 7s. They're growing at 30 plus percentages. I appreciate your honest opinion, but why? Like my music Gen X, I'm not questioning your stock picking abilities, but I haven't seen, or maybe I have seen your name a few times, but like, you know, it's not like I see your name constantly. I see this all the time where people come into the chat and then they say something like, oh, this company is not going to work, and then give me no reasons for it. They're struggling to scale earnings with revenue. That's not even true. Are expenses going up? Yes, but that's because they're in a massive build-out phase. But that's every startup and every growth company on earth. Tanner, how is just a port of Meta, Amazon, Google, Nvidia, just all excellent growth at amazing prices right now? Yeah, brother, you and me both don't know. I mean, yeah, the answer is capital expenditures. People are just worried that you know, those expenses are not going to pay for themselves. But boy, it seems like an awfully bad bet to bet on the best engineers, the best employees of the world, fortress balance sheets, digital products by design, so they can move and adapt their products to the shifts of how the world and like they're fully global businesses. I don't know. It's crazy to me. Tanner, do you think Nvidia will crush earnings because they have to, or else the market will take the final leg down before we head back up? I don't think that they're going to crush earnings. I think earnings expectations on Nvidia are 65 plus percent, 65.5 plus for Wall Street expectations. That's hard to beat, you know? But let's imagine that they're in line on that growth expectation. That's 65.5% growth. And then I see people go like, oh, Walmart beat revenue. Hooray. They did, we expected 5.2%, but instead they got 5.4%. But if Nvidia can't put up or if they can't put up 67% on expectations of growing at 65%, we're going to sell them off, even though the multiple on trailing earnings is like nearly the same. It's crazy. Costco and Nvidia have the same multiple. One's growing at 8%, the other one's growing at 65% with better margins, with way, 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 way better margins for Nvidia. SoFi, $18.97. It happens, ladies and gentlemen. This is why I think, honestly, you can get into these companies. One sec. You can get into these companies and not have to rush into it this individual week. I think that this sell-off can go on for a little too long. You know, markets can remain irrational longer than you can remain solvent. The reason why that's such a quotable statement is absolutely true. So I don't think that this is the time to like run into margin to pick up these dips. You know, whenever you gain a little cash, whenever Dookie ends up giving me my allowance, that's when I go and I buy. But I'm not looking to lever up here or buy SoFi 2x leverage DTFs or something along these lines. Just not the way that I want to play it, because things can remain really dumb for too long. SoFi at one point was like legitimately like $5 a share, right? 1x tangible book, growing at high rates. Macro is worse, but like the price has been stupider. I gave Steve his allowance the other night. Yeah, I heard. Am I going to be accumulating more SoFi shares? Yes, but I need money. But I also think there, like I said, there's other things selling off. I wonder if I want to take a little starter position in Wix. I'm telling you, Wix is interesting. Wix is interesting. There's not too many companies that I would buy here. Like, well, I don't know. In the same breath, like even like, you know, Zeta at $15, like everyone's talking about this name. It's like, okay, well, maybe I should do some work into Zeta, or, well, I don't want to buy Coca-Cola, but there's a couple really high flying, innovative names that I would like. Nubank at 17. Even this is sold off a little bit. It was at 18.98 before. Am I selling anything? Yeah, I sold out of Airbnb and Shark Ninja and, you know, names like this that just didn't really fit into the broader theme of my portfolio. To buy names like Nebius and SoFi. D Local. I haven't added to D Local in a while. $12.75. That's crazy. Yield Max Nvidia weekly ETF. Not for me, my friend. You enjoy though. Hi, Tanner. I'm struggling to understand how Meta has used AI to accelerate revenue growth. Isn't 95% of their growth from ads? Where's all this AI being used? Well, I think many people think that AI is like a chatbot, right? And you immediately think of like Meta AI. But what they're actually doing is they're giving AI a ton of data, and they're saying, okay, well, how can we, like, what are the trends that you are finding? How can we end up marketing to these people a little bit better? And they're using artificial intelligence to find those opportunities. So it is ads. 95% is ads. And the benefits on their ads, the way that they're putting more ads in front of people and the conversion is raising, is not just, you know, they're just coding that into existence from nothing. That's their models. They have artificial intelligence models that are helping with their conversions on advertisements, putting the right advertisements in front of the right people. AI is doing that. So yeah, I think it's the hard thing for the market, though. I'm not even. I think that is a common thing of how people are thinking about how people are thinking about Meta is like, okay, but where's their line item in revenue, and why are they spending hundreds of billions of dollars if it's not showing up in their revenue? But it is showing up. You know, if you go to Meta, and we go to revenue growth quarterly basis, it's one of the largest companies in the world. Growth is growing at, 24% year over year. Do you think that the amount of phone use and social media use year over year went up 24% worldwide? No. No, but they're pricing on advertisements. If I can let's zoom out here on and go to worldwide ad impressions delivered and worldwide average price per ad. These have continuously improved. They're literally delivering 18% more ads year over year, while the amount of users, where's total users? But even customer acquisition, like this is all part of it. Where's users? Am I daily active people? So their daily active people is up 6.9%, which is even that is insane. But they grew the amount of people on their platform by 6.9%, but the amount of ads that they delivered to those people went up by 18%. So they're showing them more ads. They're able to price those ads higher to more people. That's a deadly combo. And now, going forward, they want to grow revenue at 30+% rates into 2026, meaning it's the growth is even accelerating. Weak argument, you are comparing apples to oranges. Are you talking to me? You talking to me? Or were you having a conversation in chat and I wasn't reading? Do you think that the Clarity Act will come through? It's poised to be in April. There was actually a conversation with Coinbase CEO Brian Armstrong. A little bit to this in the progress that they've made so far. Let's have a listen.
Regulation is a big topic here at the World Liberty Forum in Mar-a-Lago. Joining me now is Coinbase CEO Brian Armstrong and Senator Bernie Moreno, Republican from Ohio. Senator Moreno is one of the leaders of the negotiations in Washington and a former crypto entrepreneur himself. Gentlemen, it's good to have you both.
Thank you for having us.
Kind of rare to have you together. I like it. So Brian, what is the status of the market structure regulation that you famously blocked from passing a few weeks ago?
Yeah, well, we're here meeting with crypto companies, bank representatives, and senators as well to see if we can get to a solution on market structure. And one of the big issues that did come up in the past was this idea of stablecoins on rewards. I wouldn't say we blocked it. In fact, nobody, I think, in the crypto space has been working harder on this over the last few years to try to get some legislation. What we did say was the current draft, we had some issues with it. I think that caused everyone to come back to the table. And there's now a path forward where we can get a win-win-win outcome here. A win for the crypto industry, a win for the banks, and a win for the American consumer to get President Trump's crypto agenda through to the finish line so we can make America the crypto capital of the world.
Were you surprised? What was your reaction when he after he's obviously been so involved in this and was so deep on it and then came out against the version of the bill? How did you react to that?
Well, look, I had concerns about the bill, still have some concerns about the bill. We weren't done. We got hung up on the issue of rewards on stablecoins, which is really, in my mind, really shouldn't be part of this equation.
Wait, can we just explain this? Like why people should care about this? What the whole yield rewards on stablecoins thing is about?
Well, unless you own a bank, you probably shouldn't care. Because if you're an American consumer, what it means is that the cash that you hold, you're going to have competition to pay you more interest. So you're going to be able to get more money for the money that you have in your wallet or the money that you have in some sort of account. So this is very, very good for working Americans because ultimately this is about giving Americans more rewards for being able to have cash on reserve, be able to get paid quicker, be able to transact faster, democratize the financial systems. But we're going to get this bill across the finish line. But I would say
when?
Hopefully by April. Hopefully by April.
I was going to say, because if you don't by the midterms and then the House goes Democrat, then what happens to it?
Well, the House isn't going to go Democrat, neither is the Senate. People say, well, the election were today. The election is not today. We're going to win because, look, at the end of the day, the American people are sick and tired of open borders. That's why we got elected. They're sick and tired of high inflation. They're sick and tired of an out-of-control government. We're about to see $100 billion in additional tax refunds, most of that money going to working Americans. The Democrats only have one idea, which is hatred of President Trump, and that's not a very good idea. in terms of actually advancing the lives of working Americans.
So Brian, on where it goes from here, the senator explained the whole issue of rewards for stablecoin issuers. I know the banks don't like it, right, because they see it as a potential threat to their deposits. But some critics would say you're just trying to protect your business.
Mm-hmm. If you survey Americans, 87% of them say that the current financial system doesn't work for them, that there's too high fees, there's delays, there's unequal access. And so crypto is updating the financial system. The smartest financial service institutions out there and banks are leaning into this as an opportunity. You can see on LinkedIn, they're all hiring for crypto and blockchain product managers and engineers. And Coinbase is actually powering infrastructure for 5 of the largest banks in the world right now. So the smartest ones are all leaning into this as an opportunity. This is about, it's good for Coinbase, it's good for the crypto industry, but it's also good for the banking industry to embrace innovation and adoption. America has never been one that just tries to be stagnant and protect the incumbents. We want to lean into the future and make sure that America stays competitive, because we're existing on a global stage here, right? Like China is putting out a central bank digital currency that is paying interest. There's offshore unregulated stablecoins, which are actually much bigger than the ones that are regulated within the US perimeter right now. President Trump has said he wants to repatriate these funds to build this industry here in America. And to do that, we have to have stablecoin rewards.
So where are you in discussions with the White House on moving this forward and getting it passed by April?
Yeah, well, the administration has been incredible on this. President Trump setting the tone from the top, naming David Sachs as the crypto czar, Patrick Witt, and then the Senate has been incredible as well. So they're meeting, as far as I can tell, daily on this to try to move this forward, and they just deserve a ton of credit. So all we've tried to do is behind the scenes be constructive, lay out potential solutions that can be a good win-win outcome for crypto and the banks. And I feel confident they'll get something done.
Is it moving forward with these rewards in place for stablecoin?
Yes, there's a small list of remaining open items, and I think that if a compromise can be found, this will get to the president's desk for a signature in a few months.
What about the price of Bitcoin and the fact that it was down last year and an up year for the overall market, and has started out really rough this year, down more than 20%? Does that impact the sort of broader movement to get more done here?
Not really. I mean, crypto, sometimes it's up, sometimes it's down. It's all, Bitcoin is still the best performing asset of the last decade, right? So we try not to take a short-term point of view on that. When crypto prices are down like this, actually Coinbase is buying Bitcoin. We're buying our own stock back. We're just continuing to build in these down markets. So there's an opportunity whether the market is up or down, and we try to just take it.
Why do you think it's down so much?
People have a lot of Monday morning quarterback type theories on this. Whenever the market moves, they'll say, Kevin Warsh is an inflation hawk, or they'll say that quantum computing is on the horizon. In my view, the markets are a little bit more psychological than that. People say, I don't think there's any substantive issue, but I think other people do, and they'll want to lock in gains and move it up and down.
One thing I've heard is that quantum is going to break the blockchain.
Mm-hmm.
Is that true?
No, that's not true. I think that's a very solvable issue. And actually, Coinbase has been very front-footed on this. We put together a quantum advisory council, and we're in regular contact with the major blockchains about a path to upgrade to a post-quantum cryptography world. So we're going to stay engaged on that, and I think it's very solvable.
Senator, I'm curious about what your vision is here for the future of crypto, stable coins, and getting them into the U.S. system in a regulated way, but also not threatening the U.S. dollar.
Well, actually, it's the opposite of threatening the dollar. This is the best thing that could happen for the U.S. dollar because it dollarizes the world. It creates massive competition for treasuries, which is going to drive down our debt cost to the tune of hundreds of billions of dollars per year. And by the way, put more money in the hands of consumers. Ultimately, that's what that is. When you have people who are depositing money and they're not getting the kind of return they should get or rewards that they should get for having those deposits, that hurts working Americans. They're the ones that are suffering as a result of that. You can also have, by the way, imagine a world in which you have instantaneous payment for payroll, where payroll doesn't settle twice a month, it settles every single solitary day. You have velocity of money. The idea is very simple. Money should move at the speed of information, and that is going to happen. Let me just be clear. This will happen. That's not the question. The question is, does it happen in the United States of America, or does it happen somewhere else? We cannot lose our innovative edge, and that's why President Trump is the person who's going to.
According to JFET in chat, no one is going to be using stable coins. So disregard all these comments about money moving at the speed of information. No one will be using it. I honestly think that the whole world will be using stable coins, and you won't even know it. You will have no clue that you're even using it. No one at least not the average person, can tell you what is even happening whenever you tap your Visa or MasterCard to a terminal. You don't understand the communications, the authentication, all the stuff that's happening on the back end, connecting the merchants to the acquirers, to the banks, to all of this stuff. You don't need to know. But somehow it just works in 2.4 seconds or whatever the actual number is. Stablecoins is going to be like that. Are you going to move your money into stablecoins? No. Is it going to somehow work faster and whenever you go to send money to someone, it is free, instant. You don't have to wait for a weekday, something like this. Can you send people money globally without any problems at all in any currency that you want? 100%. People have been talking about stablecoins for years. It's not happening. This is the same. We've officially found ourselves a troll. It's the same stuff as the full self-driving vehicles and all of this stuff. You have no idea how much forward progress we're making. They're constantly making progress right now. Look at the Genius Act. Stablecoin growth we're at hundreds of billions of dollars of stablecoin use. You're not worried about it because you're in the United States. You have US dollars. But if I'm in Venezuela and I'm getting my paycheck in Venezuelan Bolivar, you think I want to hold this and die slowly to inflation? So no, let me go to my local bank and get US dollars. Oh, they won't do that for me because it, risks their financial institution? Okay, well, where can I turn to? Coinbase. You can go to Coinbase right now and they'll give you US dollars in the form of crypto. A ton of people in institutional markets love US dollars because to them, that's stable. Okay? You being in this market, it's like you don't even realize how good you have it. Yeah. Ain't no one buying USD. Yeah, seriously. I troll, therefore I am. That's all right. I need the trolls in chat. That way I can go off. If I can't go off, I might as well not go live. Tanner, what price should I add to my Palantir position? I'm probably not the right person to ask. I think, there are companies that are forever expensive. And then then Palantir is forever whatever valuation that, it's at today. Freaking 200 times PE ratio. There's expensive, and then there's Palantir's valuation. It's in a different atmosphere, but it's much cheaper than where it was at 207. How low should you go to add to it? The number that I say, it probably won't ever drop to. So I don't know. It's not one of my positions. Tanner, I am new to the channel. What was your take on SoFi? I mean, the sell-off, like the market can do its thing. I focus on the fundamentals, and the macro looks good for SoFi. The 10K looked good for SoFi. I'm going to continue to buy and hold, and I take a similar stance to like what a Brian Armstrong would say. Like psychologically, markets are still completely dominated by human emotion, and that some people are saying, well, you know what? I actually think that this name is going to do fine, but my neighbor thinks that it's going to do bad, so I'm going to lock in some profit. All right. I'm going to add more. When there's blood in the streets, buy property. That's the way that I looking at it. Okay. Lemonade down 5%. I know, and it looked like the company did decently well, but yeah, it was down. I need to look more into it. Insurance scares me, though. I don't personally feel like we need crypto. Stablecoins are great for activity on the blockchain, but I don't think that we need blockchain to begin with. Yeah, I mean, I think that a trustless system is really hard to build, and then Satoshi kind of built one, and now we've seen like a bunch of forks of that, like through Ethereum and everything. I think to have a system that kind of solves individual identity, individual ownership, privacy, um, like there's so many things in blockchain that maybe not all of them need to be used for every service, but there's individual use cases for all of them. There's ways to for real take in like things like people's social security numbers and stuff like this, or I don't know what you guys call it, or social identity or whatever. And for no one to be able to access that information, but out on the other side, the blockchain can tell you whether or not the identity would match up with the individual that's actually looking at it, which is essentially what 8Co Holdings is doing, or WorldCoin. You can store people's identification inside of blockchain, and yet that information goes out to no person. Like there's no corruptibility there. There's really interesting use cases with crypto. I don't know where it goes, but yeah. Okay. Privacy on the blockchain is not even possible. Well, that's not true. That you're a Google search away, Parsifal, from learning whether or not that's true. You can definitely. It's the reason why there's still a bunch of criminal activity. It's not just through. Like obviously there is ways of like, hey, okay, well, where was the last time that they entered through a centralized exchange, and what are they taking out on the other side of that? But that's very surface level. There's absolutely tools for privacy on blockchain. Yeah, exactly. There's a bunch of stuff that you can look into. Zcash and all this stuff. Okay. Didn't someone very well known say if we found out the real person who created Bitcoin, it would go to zero? I mean, sure. I don't know. Sounds like a random ass comment. Yeah. Are you buying Wix at these levels? I have not purchased it yet, Rachel. However, it's definitely super interesting. Is Epstein Nakamoto? Can you imagine? Jeffrey Epstein is Satoshi. What was that insane basketball player that said that he met Satoshi back in '91 or whatever? He said it on stage with Michael Saylor. Look at this as well. The combined total revenue of Uber Eats, DoorDash, and Instacart. Scottie Pippen, yeah. What an idiot. Okay. Look at the massive jump up in total revenue in Q4 for food delivery. I'm a big part of this, okay? I'm a sicko when it comes to Uber Eats. I'm spending like tens of thousands of dollars a year on Uber Eats. However, it still is mind-blowing that this is growing so much. It is a lot. Yeah, it looks like we're not in a recession. I know, right? We'll know whenever we're in a recession, whenever people start cooking at home. Not me. Not me. I don't have money to buy the dip, but you'll be... I never have no money enough to force me to cook a meal. I will never. Tens of thousands. Yeah, I think my Uber Eats bill like last year was like 20 grand or something like that. Yeah. And then I do like meal prep services as well. Like I had a local kitchen that was cooking me meals and everything, but I stopped doing it because there was only so many menu items, and then they just sort of like went through them again, and then I got lazy with the meals. Um, 20 grand is insane. It's not that bad. Your woman doesn't cook? Well, I don't like your tone, but I mean, for the most part, not really, to be honest. She's got a job too. She works a ton. Tanner, do you have a kitchen? Yes, I have a kitchen. Davis cooks for a bit. That's really funny. Tanner, what do you think about MicroStrategy? I don't really think about strategy all that much. You could hire a chef. Dude, I promise you I've looked into it. I promise you. I've done every sort of local kitchen like service where they'll deliver the meals to you. But none that have actually like cooked in my house. I haven't found anything that's like reasonable price. Like I'm looking at them and they're like $200+ a day or something like this. And I'm like, okay, well, I'd just rather order on Uber Eats. Like, there's enough food services around me that I could try a new food item for 3 years without trying something again. But yeah. I cook for Ray twice a day. HelloFresh, you try those? No, that involves me cooking. That would kill the purpose. I don't want that. QQQ is down 0.5% on the day. Little bounce off the bottom maybe at 600. SoFi back above 19. 20 grand in Canadian money or real money? Canadian money. Well, I do use US dollars for most things. My bills are in Canadian. So I don't know what that would be in US. Like, I don't know, 15 grand, 14 grand, something like that. Yeah, it's monopoly money. The remainder of the week's stock market is just okay. How much is your utilities? Not much, honestly. We don't like, I don't live in a like big house or anything like that. I think it's like 1,600 square feet or something like this. It's just me and her. So, my bills are relatively low. It's just food and stuff like that. $15,000 divided by 365 is $41. Yeah, but that's how much it costs to eat. Like, that feeds 2 people. I think $20 a day to feed a person is not bad at all. That's not even bad. You know what I mean? Take a break from streaming and do some cooking. It's healthy physically and mentally. No. Guys, you don't realize, like any time that I think I'm like, okay, well, I'll stop and I'll go cook. It'll take me an hour. Then I think, okay, well, how about I work for an hour? Will I make more or less than whatever, like $20 for a meal? 1,000% it would push me to go work. There's zero incentive to cook anymore. Yeah, 50, like for real. Those are sort of old themes to think of. Like, I get a coffee every day from McDonald's. I still do go and get groceries and stuff, but it's mostly like I don't know, protein bars or something like this. I have an obsession with protein bars. I've tried every single one. I could do a tier list on them. I love them so much. I eat them just like regular food. It's probably bad for me. I don't know, but it fills me up and I like them. Yeah. Dude, barbell is S tier. You just, for real, first comment about a protein bar, you literally, barbell is a candy bar. There's nothing better. You just aced it. First try. First one I saw. Does Mr. Beast have a protein bar? Honestly, people tell me this too, like get slow cookers or like pressure cookers, stuff like this. And I just for real don't want to. Protein bars genuinely suck. No, they don't. They're so good these days. They're perfect. I for real have not had like an actual candy bar that like maybe barbell does not taste like a candy bar, but to me, I mean, for real, it might as well be like, that is a chocolate bar. It might as well be. Boring tub of unflavored whey. I don't even think I've had unflavored whey. I think like my version of unflavored whey protein is like vanilla. Pressure cooker hard-boiled eggs. Jeez. David's good. I've tried David. I've tried them all. I'm telling you guys. It's like yeah. I like it a lot. Okay. Let's go through some actual news stories because we haven't really covered much today as it is. OpenAI is looking at their first phase of funding rounds that could bring an additional $100 billion from strategic backers like Amazon, SoftBank, Nvidia, and Microsoft. After this, they'll end up going into smaller venture names to try to raise an additional capital for phase 2. Jensen Huang. Here, wait, what is this? Jensen Huang said that he doesn't see an AI bubble, saying AI investment is just beginning, worth tens of trillions of dollars. He also teased that a chip that will surprise the world will be unveiled at GTC next month. I mean, I hope that sounds like some Steve Jobs level excitement. Dude, the Fairlife chocolate milk 30 grams of protein thing, unreal. Will it be the Rubin Ultra that Nvidia is going to show off, or do you think it's a completely different product? Almost like their Bluefield chips or some sort of new networking chip or something like this. Is there any leaks on it yet? Like, do we know it's Rubin Ultra? Yeah. OpenAI will go bankrupt in 2 years. I don't know. Either, like, they could probably just slow down some of their growth efforts and try to change pricing to end up. Like, I don't know if they'll go bankrupt. I think that they're growing not because they have to, or raising money because they have to, but more because they want to keep up this level of growth. Samsung Galaxy S26 Ultra is coming out next month, according to, well, Samsung. I'm not going to upgrade my phone to Samsung. I think in September, Google's going to end up showing off their next Pixel phone, and that's what I'm going to end up going to. Nvidia protein chips? Yeah. I'd be a buyer. Okay. Tom Lee just was recently on CNBC talking about the state of the market. I know it's a little bit like, oh, actually, you know what? Before we do that, before we listen to Tom Lee, Figma was recently on talking about their results. I really want to hear this. I listened to their call, sounded great. Love the team there. Now, hold on a sec. Before you listen to who Dylan Fields is, he's a 34-year-old man. He looks 20. He's running one of the biggest startup software names in the world. But boy, oh boy, this is the definition of a baby face. So I don't want to hear it in the comments. He's a smart man.
Beating estimates on the top and bottom lines and giving upbeat guidance. The stock is on the rise pre-market, but it has been under a lot of pressure amid a broader sell-off of software companies. We've been talking about the potential impact of AI on software companies. Yesterday, I spoke with CEO Dylan Field first on CNBC and asked him about the quarter.
It's amusing to hear the narrative of software is dead while also looking at the reality of the exponential growth of software that we've witnessed over the past decade and the continued exponential ahead, where it's going straight up vertical now in terms of the amount of software created in the world and the amount of people doing it. And we believe with Figma that we can be a center of gravity for product teams building software and a place where you can, regardless of where you start, whether it be, shower thought, napkin sketch, brainstorm, design, code, terminal, whatever, wherever you start, you want to be able to go everywhere in that process at different times. How do we let you do that in Figma? And how do we let you do it with your team? Is something that we're really excited about. And I think that the way that's getting reflected in terms of non-designers now getting involved in the design process is incredible. And we had a really amazing quarter because of this. And I think we'll continue to see more people getting involved in design because design is now how you win or lose.
You have accelerating growth among the customers driving these Q4 results. How much of that is from existing customers effectively paying more versus new customers on the platform?
A mix always, but what we've been very excited to see is how those existing customers continue to expand, and they do it in a way where it's not just hiring designers, which they're doing too, and they're doing a lot of that. There's a bit of a design talent arms race going on, but also we're seeing more non-designers contributing to the design process now and getting really involved in design. I think this is why we're seeing so much rhetoric and talk about taste right now. With everyone in Silicon Valley saying that taste is now a core skill, and it's all about taste. This is what we've been thinking for the history of Figma, of course. The design is a differentiator, and that craft point of view, that's what's going to set you apart. But what really matters right now, I think, is that you have the ability to create something unique and to actually stand out from the market.
Earlier this week, Figma announced a partnership with Anthropic that bridges Claude's coding tools and Figma's design processes. And I asked Field about his view of the different large language models.
I've used basically all the models right now, and
So which one do you use the most right now?
I'm not your average person on this. I don't watch Netflix. Instead, I jailbreak models for fun. And I explore them deeply to understand what they're capable of, and I use all of them for that reason. So I'm not probably the right.
I know, but come on, just stack rank them in this moment. I'll stack rank them for you right now in this
Go
moment.
for it.
By the way,
Yeah,
of
let's
course,
hear
this
what you
could
think.
change in a month or two. In this particular moment, I would put Claude at the top of the list. And maybe put Gemini even at 2 and OpenAI at 3. It depends sort of what the use case is. And by the way, I probably wouldn't have given you that ranking 2 weeks ago. 2 weeks ago, I probably would have had Gemini at the top, OpenAI maybe vying for 2 with Claude, depending on the use case. And I would bet that if we had this conversation a month from now, I might put OpenAI back at the top, depending on whatever you think their next release looks like. And that's what
you beat me to the punch, I think.
Changing.
Yeah, you beat me to my what I was going to say, which is depends on your use case and the details of your use case. So I don't really think it's a apples to apples comparison between the different models. I mean, one way to put it is it's like they're slightly different alien intelligences, and they're almost different species at this point. So not like species in terms of speciation from a human standpoint, but like they feel like they're very different in the ways that they approach things. And I think it's underappreciated.
The big issue, as you know, right now in the marketplace is this view that ultimately these large language models that you've partnered with are going to figure out a way to ultimately create software that is similar, if not better, long-term than what all these software companies, including Figma, have done. What do you think of just that very premise?
Well, I think first of all, we're not there today. And today, very much you need to steer these models. And I think that it's certainly the case that we're going to see more software than ever because of this. I think that humans will add diversity and more exploration than the models would alone. If you think about, yes, the models are non-deterministic, but they kind of come up with very similar stuff unless you steer them into a particular direction. And if you ask them to steer themselves even, they will still steer in predictable ways at first. So it really requires the human to create the trajectory for the model and light up their latent space and make it so that they can actually go figure out the right things to go do. And what I think we'll end up with is a place where, for software, design is a differentiator. And if you have a point of view for not just your company and your brand, but also for your product, and it all flows through about what your view on the world is as a company, that is going to be essential in a way that people, I think, do not fully understand or appreciate today. And actually, I think you'll need to have a view that's somewhat controversial. If you want to stand out in the attention economy of today, just sort of saying we sell apple pie is not going to cut it anymore.
You're rolling out a hybrid pricing model going forward, and this effectively means you're going to be enforcing seat credit limits, and I believe that starts next month. And so I just wonder how you think that's going to impact the paid customers.
Well, so we already, people are already paying for seats. We're actually giving them credits for inference here. And then that's something that we're trying to be generous about. And then if they go over the credit limit, then yes, they can basically go and get additional credits. And yeah, we're excited about seeing where this goes. This time last year, we didn't have any notion of AI credits in the platform. And now about 75% of our customers that are over $10,000 or more in ARR are consuming AI credits weekly. So we'll start monetization of these AI credits in March. And from there, I'm sure we'll be evolving with our customers and trying to figure out how we can create the best capabilities for them.
I think that, everyone's saying that the seat model is dead, absolutely might be true. I think the part that people are misunderstanding is how fast they could potentially shift this into, an AI credit-based model, usage-based model. Figma being obviously one of the more faster moving ones here. That said, I do actually think that the world is going into a more taste-based model of like which companies will be successful. The problem is for me, I have no taste. You know, I actually think that they're right, and I think I have no taste. I like, those people in your life who whenever they see something, they're like, that is not a good color combination, everything like this. Like even like the stupid purple that I used with the other, like this sort of darker, this sort of color scheme, that dark with this purple. I didn't pick that. Like none of this is my idea. I don't care. And honestly, if you guys are following me, you guys probably don't have any taste either. Like we're a bunch of Excel nerds. We don't care. Like I'm an analytical guy, but AI is going to replace the analytical guys. So, yeah, I don't know, protest their offices. I'm not sure. Does your girlfriend have taste? Well, I think I'm a perfect example that she probably doesn't, or her taste is pretty weak. But no, actually, she's a lot in the very creative fields. Very much so. I did well in math, but like imagine Steve Jobs, like early on I'm listening to his freaking book and I'm like, imagine him with vibe coding. Like he has taste. That's somebody who specifically has taste. Bill Gates, another very successful company, same field, zero taste. Like he was making functional products. Steve Jobs was making art. Both worked out, I guess. Yeah, actually, I was making fun of his baby face. He didn't even have nearly as much of a baby face as he had when he was younger. By the way, their earnings call was great. It was like a full video of them actually using the product and showing how it worked. It was great. Okay. You have a baby face without the stash? 100%. That's why I can spot another baby face. I see him and I'm like, look at this dork. It's like me wearing a different coat. I know who I am. I'm him. This stash just makes, I'm a sheep in wolf's clothing, but the wolf clothing is the stash. Behind this, I'm a sheep. Anyway. I am him. No, I am not him. Okay. OpenAI and Anthropic CEOs make case for companies on global stage. I think that was the India meeting that they had. You don't see a shadow on Tanner's face, whereas all right, let's not go into my capabilities of facial hair growth. Okay. What we do have though, and what we do need to focus on is Open Door tonight. Open Door, Sprouts, Texas Roadhouse, Dropbox, Stitch Fix, maybe if you guys are into that. These are some of the companies that are going to be showing off their earnings. Do I go live to listen to Open Door? Like, is that going to be a fun one? I only want to go live if it's going to be fun. I think the audience might change a little bit. It's very culty stock. Did you see Pete Hegseth was talking about blacklisting Anthropic? Yeah, I did see something along those lines. I need to get a reminder on what it was about, but it was something along the lines of how it's, yeah, there was a privacy concern or something along these lines with using Anthropic for really sensitive government projects. I'd have to look at it again. Okay. AppLovin is apparently looking to own its own social network. All right. Elon Musk is calling to bring back insane asylums in the United States, saying, make asylums great again. Okay. Dutch Brothers is down a lot today. Why is Dutch Bros down? Bros. Stock down 7.3%. Nothing is getting a break here. You should, but Open Door only exists as a meme stock. Yeah, I just like that Kaz is the CEO now. That's the part I do like. Okay. Ladies and gentlemen, Howard Lutnick bought IREN and BMNR last quarter. Interesting. I am going to get going. Thank you all so much for watching. I need to do a BMNR video update. I have not done one of those in a very long time, mainly because nothing interesting has remotely happened. And they're just acquiring ETH slowly. But maybe the Mr. Beast news and all of that stuff requires an update. I haven't done one in a while. Thank you all so much for watching. Really do appreciate your time. I will most likely be live tomorrow, but not sure if something ends up coming up. I've got some plans tomorrow, which are less about work and more about play than work. But thank you all so much for watching. Really do appreciate your time. Until next time, bye for now.